I want to check in with our real estate guru, Phil Immel, who is originally from Chicago, moved to San Diego back in the 70s. First licensed in real estate sales at the age of 19, a broker at 21, eventually managing a Coldwell Banker office with 45 agents. At 28, promoted to the national headquarters in Newport Beach, becoming the youngest VP in Coldwell Banker history. Resides in Dana Point, enjoys selling real estate. Boy, you better. Well, as young as you got into it, and has received numerous awards, including the #1 agent for Prudential in Orange County, oftentimes in the top 10 agents in the country for Prudential. Welcome to the program, Phil. Good to have you here.
Thank you. Good to hear from you.
We keep talking about record low mortgage rates, and is it starting to really help now? Are people buying real estate again?
Well, the rates are the most unbelievable rates in 50 to 60 years in the United States. However, the lending requirements are so stringent that it is precluding some sales that should be happening.
So it's hard to understand, I think, for lots of folks. I mean, I've been covering this. I do a lot of business news, and it's hard to understand. Even the president himself said, hey, some of these banks that we bailed out, that we gave you a break to, you should be lending more money to consumers, but we haven't really seen that, have we?
No, they've been holding back and, again, restrictive on the underwriting for the loans. I mean, if you're a W-2 employee with 2 years or more history and great credit, you're good. But most of the economy is, destroying the credit report for one reason or another, job losses.
So who are the buyers these days? What are they buying?
Well, the current mix of buyers is interesting. I mean, about half the market is distressed sales, which includes REO bank-owned listings that are selling to buyers, as well as short sales. I would say investors are making up 50% of that demand, and then the other portion are first-time buyers. And a small segment trend that we're seeing now that we haven't seen in a while are empty nesters selling the big home, downsizing to a smaller home, and retaining their old property tax Prop 13 numbers, which makes a lot of financial sense.
What about the inventory? Still a lot of property available?
Actually, no. The inventory is off about 35% from the number of listings in Southern California than it was a year ago. So the banks have slowed down on putting their REO properties on the market. Therefore, that inventory is shrinking. A lot of homeowners are still in a wait-and-see mode if they should sell because prices are so depressed. So actually the inventory is off, and so their demand is very, very hot for $500,000 and below sales prices. As you go higher, the market changes. It's a bifurcated market as you get higher.
Now, has the so-called jumbo loan come back?
Not really. There's talk about it. There are some banks and some lenders that are doing that, but again, you have to have pristine credit, high liquid assets, a number of years of great employment and foreseeable employment in the future. So it's more of a fallacy at this stage of the game, and the underwriting is ultra restrictive.
I won't name names, but I have heard some advertising from certain financial institutions saying that they're doing more to loan money to the average, you and me, I guess, meaning the average consumer. But what you're saying is we're not really seeing that in great amounts.
No, at the front line, I would say most of our contemporaries in the residential real estate business are not feeling that. It's better than it was over the last 5 years, but, very nominal improvement, inching along. I wouldn't say it's growing by any leaps and bounds.
Are we seeing any increase in what we would call income property, people buying up homes to rent them out or lease them?
Yes, that's the investor market, and there's multiple demand, multiple offers throughout Southern California in the $500,000 and below price range. It used to be, even 4 months ago, that the banks would put an REO property on, and they always start a little bit high, but ultimately they'll sell where the market really is. Today, you might see 5 to 15 offers on a property, and many of them are all cash investors. They're competing with the first-time buyer, which might get an FHA loan for 3.5% down.
So when we're talking $500,000 or below, we're talking about property that's probably not on the coastline.
No, most of it, but even in Orange County and in parts of LA, if you get off the water within, maybe 3 to 5 miles, there's inventory like that. There's some, sporadically in Dana Point, but the vast majority of it would be slightly inland from the coast, maybe 5 miles or more.
So if I'm looking to buy and I want to get, I know there's going to be competition if I'm looking for a home that's under, as you mentioned, under $500,000. Where are some of the better places to go if I'm looking for a place? Where can I find perhaps more variety of what I'm looking for?
Well, for the $500,000 and below as an owner-occupant, most people are obviously going to go where their existing family and their jobs are based within a certain radius of that. And that's, there's many parts of Ventura County, LA, Orange County, where you can find that. In Orange County, I would say a town like Mission Viejo with great schools would be a good prototype for a market like that.
What about the Inland Empire?
Inland Empire is definitely deals of the day. I'm not sure that market is stabilized, where I would say, conversely, in the major metropolitan areas of LA, Orange County, et cetera, Ventura County, the market has stabilized pricing-wise. In the Inland Empire, you're probably going to see a little bit more softening of prices. I wouldn't think it's dramatic, 5 or 10% more. Still worth shopping and buying if you're paying rent, which, by the way, because these investors are buying these properties, rents are escalating at 5 to 6% per year. So when you look at the after-tax benefits, clearly if you're a first-time buyer, it's time to be in the market full speed ahead.
So I might be better off to buy than rent.
Definitely, and especially with today's interest rates as low as they are, when you get the tax deductions, and let's say you're in a 25% combined income tax bracket, if the government's legally helping you, subsidize your payment, you will end up most likely net lower in home ownership pricing of ownership per month than you would if you were to pay rent, and then you don't have any control over the future rent escalating.
But it could mean I'll have to move somewhere other than where I live now, in the area where I am now.
It could be. The market's still soft between $500,000 to $1 million, and then it's actually soft all the way up to $5 million overall in Southern California. There's sporadic big deals happening, by the way, but we've seen more activity this year than we've seen in 6 years for a year-to-date status.
Come back and talk more with Phil Immel, who is our real estate guru, talking about Southern California properties, both real estate properties, commercial and residential. And source, if you'd like to get in on this, have a question about some real estate, give us a call at 888-539-2980, 888-539-2980. Come back and find out what's going on with Facebook. Fascinating today as it continues to drop in value. More Money 101 coming up on KFWB News Talk 980. Talking with Phil Immel at realestateguru.com, there was a recent survey that was put out by Zillow that said that 1 in 3 homeowners with a mortgage in Los Angeles County still owes more on the loan than the property is worth. In the hard-hit Inland Empire, that climbs to more than half of the borrowers, and I would imagine, Phil, that's what's causing the big problem in terms of housing sales still depressed.
Yes, it is. Interesting study. I think it's the first time they've had some clarity on how bad it really is. And it could take people, 10 to 15 years to recover value-wise on something like that. So it creates a lot of other questions that go with it.
And I think the survey also found that, I think it said that 90% of those homeowners are still making current payments, and if they can hold on, then they come out okay. But the question is how long they can hold on without trying to sell.
Well, exactly. I mean, I would think the average person in that category would be 10-year hold or more, and you have to say, is that really worth it? Because, property values are back to probably 2002 levels in terms of valuation right now. And real estate, although it appears to go off a cliff in valuation, it goes up year by year very rapidly, like a jet taking off. It kind of levels out, and then it kind of comes down for the descent. And by the time it hits the tarmac, which it's starting to do this year, and take off again, it could be a 10-year hold or longer for the people in that category. So you
feel we have bottomed out, finally?
I think we have it, particularly, again, by the price range of $500,000 and below. Clearly, we've stabilized in Southern California. As you get higher, if you have a $2 million home and you're upside down on that property and it takes you 10 to 15 years to just get back to what you paid for in 2002, I think you might look at other financial alternatives depending on your creditworthiness and things of that nature.
Are most homes now under $500,000?
Yes, the vast majority are, let's say, in Southern California, $750,000 and below. I mean, the median prices in most metropolitan areas are about $500,000 or below still. The sheer number of homes, the vast majority, like at the pyramid, the bottom of that pyramid would be mostly homes in that category. And as they go higher, obviously, there's fewer actual homes or addresses.
How about the commercial property? I mean, I heard recently when I was a kid growing up, and I would ride down Mariners Mile in Newport Beach and be amazed by everything that I saw, all the boats and everything. I thought someday I've got to have one. It was always, for me, it was always the epitome of Southern California lifestyle. That I read recently where some of that land got sold, which seemed to me like it was pretty inexpensive compared to what it had been worth. How is commercial real estate doing?
Actually, commercial real estate, because of the investors and depending on the scale of the project, I mean, that's a great little area you just mentioned. It's really spectacular California lifestyle and a great place to, if you had commercial real estate. But it's dependent upon the businesses and the jobs and the demand. And there, were car dealerships and yacht brokers and things. As the luxury market collapsed, particularly in an area like Newport Beach, people went out of business and they couldn't pay their rent, therefore it depreciated the value. But on an overall whole, there is, because retail and auto dealerships and things, those segments of the economy are doing better today. That in industrial type of locations, they're starting to they're probably outperforming residential overall.
Whenever I drive through a city, I like to drive through the downtown area because it gives me some indication of what the economy is like in the downtown area in particular, because that kind of reflects the way things are in the city. And I noticed that driving through Dana Point recently, in fact, I was down there for the Tall Ship Festival, a lot of companies are still there. It seems like Dana Point and maybe some of the beach cities have been doing better than a lot of the inland areas have.
In terms of residential or commercial?
Both.
Yeah. Actually not. They're not immune from it. It may appear that way, but because our market my office is right by the Ritz-Carlton in Dana Point, prices are off 50% on residential, and on commercial, they're probably off 35% from the peak.
And if we've seen the light at the end of the tunnel, let me ask you to look down the road and see when you think things are going to be to the point where I can sell my house now to make some money.
Well, in terms of, depending on what you owe on the property, if you're still what's called an equity sale, which means you're not distressed by, upside down or delinquent payments and things, unless you really need to sell your house right now, I mean, it's better now than it has been in the last 5 years. You'll probably net more dollars from that sale, but it's still pretty soft in terms of what compared to what prices were or what they could be in a few years. But there's many circumstances why people need to sell, be it family changing situations, meaning divorce or things like that, or an estate situation. But, in the perfect world, I'd hold a little bit more. And there's seasonality, too, to the business around where you want to hold. Right now is prime time. And because there's such a shortage of inventory, it would be a good time. If you wanted to sell your house, I'd get it on the market immediately this year. And you probably have till about September before the window period starts to fade and people get caught up with the holidays.
Yeah, the so-called, are we still in part of the spring buying seasons that we're talking about?
Right, spring, summer. And in particular, some of the coastal areas are less influenced by kids going to school and things like that. But, let's say a town like Irvine or Northridge or places like that where more traditional demographic families and you want to get kids in school, you'd probably want to make that move and be in by the end of August before school starts.
Now, Phil, Operation Twist is coming to an end, I guess, in a couple of months. Do you expect mortgage rates to go up?
And I think there's so many other factors in the broader economy. I think interest rates, my personal opinion, professional opinion, would be that they're going to remain kind of in the trough that we're in. I mean, they might bump up a quarter point, worst case a half a point, but I would not expect interest rates to be the problem. What a buyer is going to encounter where they can't get a home.
Phil Immel, thanks very much for joining us. Phil Immel at realestateguru.com, talking about the fact that a lot of homes are still underwater in Southern California. In fact, underwater homeowners in several counties, staggering $139 billion in negative equity at the end of the first quarter, so still a long way to go. That'll do it for this edition of Money 101 on KFWB News Talk 980. Have a great day. We'll see you again tomorrow. Ron Kilgore sitting in for Bob McCormick.